Hi, and welcome to the Financial Argument Channel. Although nobody talks about the upcoming risk of deflation these days, I think it's necessary to warn you in advance via this video that deflation is one of the most dangerous risks for the U.S. economy. Some of you may not know what deflation means and why it's a huge problem in the current economic atmosphere, but it's one of the worst-case scenarios. Deflation can be defined briefly as a regular and continuous decrease in the general level of prices. More specifically, whenever the inflation rate falls below zero, which is called a negative inflation rate, deflation occurs. In context, a single price falling cannot be defined as deflation. In order to determine if deflation is happening, regularity and continuity are required. This may sound attractive to those who've never experienced it. People might think it'd be great if buying a new car got cheaper every year, right? On the contrary, it's not like you'd think. As a matter of fact, deflation is way worse than inflation. Deflation is actually a type of economic problem that is much harsher and more serious than other monetary depreciations. That being said, please note that the humanity has always fought against inflation. Emerging markets in particular have hyperinflation often, which results in currency crisis. However, economic institutions such as nations' treasuries, central banks, and other authorities know how to deal with inflation. But there is one thing these institutions do not know how to cope with: deflation. No central banker wants to deal with deflation. It's an unknown field of economic study. We'll discuss this in a few minutes. So why is deflation more dangerous for the economy than inflation? The answer is obvious. Deflation is dangerous because if the deflationary actions continue, producers might cut their production and economic growth will fall accordingly. The 2008 global financial crisis, also called the Great Recession, caused deflationary atmospheres in many countries, all of which had to implement fiscal and monetary policies aimed at stimulating demand to overcome this problem. If you remember, the Fed first started quantitative easing around 2008, which isn't any different than what we're experiencing right now. Japan, for example, experienced a rather long deflationary period. This period is known as Japan's lost decade, which occurred from 1991 through 2001, during which the Japanese economy faced a liquidity trap and a credit crunch. Please take a look at the chart. It shows the Japanese and U.S. inflation rates with two separate lines. The shaded area in which deflation is written is situated below zero, and as we can see from the chart, Japanese inflation didn't reach the same levels as U.S. inflation and remained mostly around or below zero. This is why Japan lost years to financial gain, starting from 1993 until 2013, which is around 20 years in a row that they lost. Like I said before, the years from 1991 to 2001 are also called Japan's lost decade. So why is deflation a threat feared by economists across the world nowadays, especially in the United States of America? Because we're in a globalized world, most countries are connected to each other, politically, diplomatically, or economically. The great lockdown of the last few months has caused almost all economic functions to pause at the same time, which collapsed demand. This led to a collapse in sales of every kind, well, except for food, because we all have to eat to live. Regardless, this type of economic shock, meaning supply and demand collapse at the same time, has been very rarely experienced. Because of the Great Lockdown, products other than food couldn't be sold. On top of that, most companies stopped business activities and lost money. There is a simple rule in economics: if demand plunges, prices must fall accordingly in order to keep selling products until new goods can be produced. But during the lockdown, sales entirely collapsed. Nobody purchased anything while staying at home. Instead, people were afraid of whether or not they were about to get fired. Here's another chart regarding U.S. retail sales year over year. As we can see from the chart, before 2020, retail sales were well above zero, except during the 2008 global financial crisis. Yet even that global crisis was not as harsh as today's. Retail sales from 2008 through 2010 were a tiny bit below -10. However, today we're facing a collapse way worse than the last. You can see on the chart that retail sales plummeted more than 20%, and the trend has continued without any sign of a U-turn or an L-turn. Who can survive in this position without lowering prices? When there are 40 million unemployed people across the United States. Of course, sellers won't decrease their prices to zero, yet the fear of it and the general trend is enough for deflation to occur in the very near future. That said, please take a look at this chart. Here we have car market records of the United Kingdom, which is a great example to support our previous statement. As you can clearly see, there were 20,247 new car registrations in May 2020. That's an 89% drop compared to May 2019, when there were 183,724. Most sales comparisons are like this. And keep in mind that almost every country suffered from the lockdown and subsequent economic collapse. In addition, the U.S. unemployment rate skyrocketed, as I stated in my last video. The lockdown effects are not finished, with the U.S. labor market threatening a second wave of job cuts, this time among white-collar workers. In the past several months, millions of unemployed Americans, without being able to earn a single penny, had to stay at home. Who paid their bills or food expenses? What if millions of unemployed people have no money to eat or afford shelter? Please note that 40 million Americans had to leave their jobs. That 40 million might sound like an ordinary number to you, yet every single one is a person dealing with economic and other tragedies, but who still has responsibilities to their family or other people. After all this, what would you say with respect to the looting occurring in the U.S.? Could there be a correlation between the lockdown, unemployment, protests, and looting? In addition, please note that the May 2020 unemployment data does not reflect the real situation. We're at a time when the numbers are at historically bad levels, so much so that, in my opinion, the U.S. Bureau of Labor Statistics is understating the reality. In addition, these statistics are revised after publication as well. In this kind of tragic, collapsing atmosphere, data sharing in particular is impacted because most participants generally do not share their current situation. Apart from these factors, the Fed has kept printing money, as we all know. Please look at the chart. Before the collapse, the Fed's balance was a little bit below $4 million US dollars. Yet now it exceeds $7 million. This much money directly enters the system with a single click at a computer. Meanwhile, people and companies can't go out to buy goods. Do you think this situation is sustainable? In addition, the initial stimulus package and $1,200 payments to American taxpayers are other problematic issues. Yet even these were not enough. So the House of Representatives passed an additional $3 trillion stimulus package. These actions, such as the Fed's quantitative easing perspective and the government stimulus packages, bring money to the market, but there's no demand and no sales. As I explained before, if a continuous price fall occurs, then nobody in the U.S. will be able to cope with it. The economy will freeze. The Eurozone and Japan are two crucial examples regarding deflation and negative interest rates. Such low demand and sales will cause prices, in general, to fall in the very near future, which is known by the economic term of deflation. It's very hard to fight once entrenched, and expectations of coming deflation also worsen price trends. Deflation is a global threat at the moment because the entire world is in economic crisis. In addition, deflation is worse than inflation, but interest rates can only be lowered to zero. Please note that negative interest rates also don't have a lot of force. For example, authorities expected the European Central Bank would lower the already negative rates, but Christine Lagarde, former head of the International Monetary Fund and current president of the ECB, didn't change the interest rate, which was already at negative 0.50%. This makes it obvious that interest rates can't be a solution to the deflation problem. All in all, G20 countries used to compete over how their economies were the best. Government leaders would state record employment numbers as a matter of national pride. However, every country's economy is now well behind where it was just a few months ago, and governments expect to soon be in an economic position they would never have accepted in the past. As we head for the presidential elections in November, we're about to face more problems, both politically and economically. Please note that what we're experiencing and suffering through right now is moving the U.S. economy toward a second sharp collapse. Every single day, the debt bubble continues to grow. The only thing the system can do to overcome any crisis it encounters is to create more debt and more money. But this financial engineering itself is the main reason for the economic collapses we've suffered through again and again. And now, this time, the money created digitally will probably lead to a significant deflationary atmosphere.